But let's also take you through what's happening at the index level. We've got some very good moves coming in on Nifty mid cap and small cap, at least outperforming the Nifty. That's the trend that we're seeing. 1.25% uptick on Nifty mid cap, 1.5% uptick on Nifty small cap. So that looks good as we speak. So the broader end looking good, the breadth looking rather cheerful in the favor of the advances. Let's get into conversations with managements from the broader end of the market. The first one is Bluestone that we're interacting with. We've got the management, Mr. Gaurav Singh Kushwaha, who's the founder and CEO of Bluestone Jewelry, joining us on the show. Mr. Kushwaha, hi, morning, and thanks for the time. I was just looking at your Vision FY30 plan, the road to FY30. You've outlined an ambitious target of 12,000 crores in terms of revenue by FY30. That implies a very robust 50% CAGR. What would be the key growth drivers to achieve this scale up over the next 4 years?
Sure. Good morning, Snehi. So basically, two of the key drivers are one of the very robust behavior that we are seeing is as our stores are maturing, and currently we have around 340 stores. And what we are seeing is in every catchment, as the stores are maturing, their productivity is increasing at a very, very good pace. So historically, 20-30% or 30%, 35% kind of growth rate, even on very old cohorts, is what we are observing, which gives us confidence that all the other stores also, and you have to understand that we started opening our stores in FY19. So most of our stores, more than 50% of our stores, are less than 3 years. And they also continue to grow at a very good pace. So I think one of the biggest drivers is the increased productivity at a per store level. On top of that, there's huge room to increase the distribution also. So 340 stores in around 140 cities is a very small number for the size of a country like India, and we are going to increase that also at a very rapid pace, aiming to double the store count, or slightly more than double the store count in over the next 4 years. And I think another thing is, if you look at the 12,000 crore and if you compare it with the size of the overall jewelry market, it's going to be 1% or less than 1% by that time also. Right? So for a pan-India brand with a presence across so many cities, that is not a very big number. So that is on basically the bottom-up build-up of how we think about it. But more importantly, things that are working very well for us are the secular trends in the industry. So I think one of the trends, one of the very strong trends that we are seeing is lots and lots of people are moving away from big, heavy wedding jewelry made for lockers. They're moving from that part to buying more and more of jewelry that they can wear almost on everyday occasions, on evening parties, and so on. So move from wedding to everyday jewelry is happening at a very rapid pace. Second is the move from unorganized to organized. As people are moving from one city to another, I think their ties with the traditional jewelers, the family jewelers, etc., are breaking, and they are more and more kind of associating themselves with national jewelers. And the third is the whole omni-channel, which works very well for us. We started as a digital-only brand, and continue to be one of the only tech-focused and tech-driven jewelry brands in the country. So this whole move to using internet as a first touch point to do your discovery, your research, etc., that is playing out very well for us. So I think these are the three fundamental secular trends which are supporting this strong growth.
Right. So that's as far as the FY30 plans are concerned. Mr. Kushwaha, morning, Ashesha this side. So the plan assumes about 30% growth from same stores and about 20% from new stores. 34% is the current normalized same store sales growth that you're reporting. Any chance that the FY30 same store sales growth could actually exceed 30% mark? And what is the outlook when it comes to SSSG growth?
See, it's very difficult to kind of project 4 years out as to what that number is going to be in that year. So I think the way we have done is we have looked at our own stores. We have sliced and diced them in every which way. So we looked at older versus new, what kind of growth rates are there. We have looked at tier 1 versus tier 2, what kind of growth is there. We have looked at, let's say, very strong mall stores versus high street stores. And we generally see a very secular trend. There's not too much of a bias that we have seen here and there. And in fact, we have also looked at growth rate in a high gold inflation when the gold was very volatile versus when the gold was stable. And in general, that trend is holding up. And I think the reason for that is it's not it has less to do with those things. I think it has more to do with how the consumers themselves are moving, how internet and e-commerce is gaining prominence in every purchase. I mean, even today, if someone is buying a car, internet plays a very, very important role in the purchase decision making. We see a lot of those things happening in jewelry segment also, and I think that trend using internet, spending more time on internet, etc. Those are the trends that are only going to increase with time.
Okay. And Mr. Kushwaha, talk to us about how demand is shaping up on ground, because gold prices had softened recently. Just this morning, they've spiked back up. But we've seen a very significant cool off otherwise too from the highest point. Are you seeing any change in customer demand, conversion rates or ticket sizes following this correction?
Yeah, so there are there's a minor spurt in demand. And I think, see, our business fundamentally is so affected by what's happening throughout the world. Those do play some role. However, our category, which is more of an everyday category, is kind of more shielded from those ups and downs compared to, let's say, investment grade purchases or heavy wedding purchases, where people are very, very, very sensitive about even a small movement in gold price. So last month, May was slightly softened because of increase in import duty, etc. And we see some of those things coming back. We see those last couple of days have been there was a small spurt in the demand, but I think all these things keep on happening. It's not. I think every time we are talking about it, there's one or the other event that is happening somewhere in the world, or somewhere something is happening to gold. There is always some noise in our numbers. But I think the biggest, and that's why I think what we have learned is we have learned to actually stay away from these minor movements, because they stay for 3 days, 4 days, and so on. Kind of focus on building the long term and medium term value.
Understood. So that's as far as the trends in the gold industry are concerned. But several early investors recently reduced their holdings out of the company. Should investors view these transactions as just routine profit booking by long-term financial investors, or is there still a meaningful overhang from private equity and venture capital shareholders?
See, I think that's a beauty of public market is that see, every investor has their own horizons, their own things. But I think buying, selling continues to happen. We generally don't look too much into that. Shareholding patterns of all the companies change over time. I think our core focus, continue to remain on building value for the customers and kind of stay away from rest of the noise.
Lastly, Mr. Kushwaha, with a target of nearly 15% EBITDA margins and 25% return on equity by FY30, help us understand what's going to be some key drivers of sustainable profitability. You've clocked a profit in Q4. Is this profitability trend sustainable, let's say, over the next 4 years?
Right. So Q4 was profitable. The entire year was also profitable. Uh, One of the key metrics for us is pre-Ind AS EBITDA, which for the entire year was around 7.4%. And that the right way to look at it is that, okay, our stores make certain profit, and then we have certain corporate overheads. So store level profit was closer to 18.6%. The corporate overheads were close to 11.2%. Now, as stores become more and more productive, the store level profit also tend to increase because the costs do not increase at that pace. If stores grow at 30%, costs do not grow at more than, let's say, 5-7%, and so on. So at a per store level, you actually end up making a lot more money. So we expect certain expansion to come from the profit that we are making at a per store level. And what also happens is as the overall scale of the company grows, the fixed costs typically don't grow in the same ratio. So as a percentage, they tend to come down. And mix of these two, we expect our margins to grow from the current 7.4% to somewhere between 14 to 15%.
Margins are likely to expand going forward. That's the word coming in from the management of Bluestone Jewelry. Mr. Kushwaha, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on your 5 to 7 year roadmap for here on. Thank you for joining us today.
Thank you, Srijan.
On that note, we need to slip into a very short break. But before we do that, here's a quick programming update. For 17 years, ET Now has empowered investors and decision makers with the insights needed to navigate India's growth story. Continuing that commitment, we bring you the ET Now Market Summit 2026, a gathering of India's leading economists, fund managers, policy makers and investment experts, including the likes of Sunil Singhania, Sandeep Tandon, Sandeep Sikka, Rhythm Desai and Vijay Kedia. They will be coming together to decode the future of Indian equity markets. A special event where SEBI chairperson Tuhinkanta Pandey will be the chief guest, and he will share his insights on navigating volatility. Stay tuned to ET Now from 4 p.m. onwards today for exclusive insights and powerful conversations from the ET Now Market Summit 2026.